To do a quick trade recap on GJ and EU today. I did post charts in my Telegram. Since I got some questions about it, I thought I'd make a quick video. Today's trades were based on basically following order flow. If we look at GJ on the daily quickly, we can easily tell that we're bearish as we're constantly putting in new lows. And the other thing we can note here is we have a daily supply in here, and that daily supply is holding. So if we go down to the 4-hour, you can again see the daily supply is holding. We came up, we tried to run it, we failed. We tried to run it one more time. So what happens now is if you look at the way the top formed here, we actually failed to break through the daily supply because your daily supply would be the high of this. The high of this will be here. I just didn't pull it across, but we would need a candle body close above that, and we got nothing but wicks, which is just a bunch of liquidity grabs to me. So in that context, right away, the first thing I think of is this 4-hour low is weak and needs to be run. And in the daily context, this low is also weak as it failed to put in a new high as well. So it should be run too, unless of course the trend changes, in which case we'd adjust. On the 15-minute, we had similar stuff going on. I was actually going to show you guys something. I had a sell limit on this wick a few days ago, and I ended up deleting it because I decided I had, I guess, traded enough that day. And yeah, I came and tapped it and pretty much tanked. But yeah, that's the way trading goes. But anyway, what I was looking at here was, so 15-minute, we had let's see, we had structure right here, this low, and then your structure high would have been up here. And as long as this structure high doesn't get violated, meaning we do not get a body close above it, we stay unconfirmed bearish. Unconfirmed because we've only put in one low so far. We need two. We became unconfirmed bearish when we closed below this zone right here. We got a candle body close here, which broke structure and made us bearish, unconfirmed. At this point, if we were to drag this red line across, basically we get no candle body close. We get a bunch of wicks, which is basically telling us supply is holding and supply is in control. When I got to the chart today, the leg was kind of sort of coming up, and what I was looking at as is what we have here is a leg that came down. We took out the lows, we put in another low, and obviously when we took out when we originally took out this low, which was over here, we became confirmed bearish. So now our bias is confirmed. Not that I would have been against shorting before. And the last thing we did was this high, took out this low. So I pulled a fib on this leg, and what the fib does is gives us our pricing. Anything above 50% is in the premium zone, anything below 50 is in the discount zone, and we don't want to sell from there too often unless you have some aggressive momentum and it's with order flow, which I'll talk about on EU. So what happened here was this is the supply, more or less. I pulled a couple candles because I wasn't sure where the reaction was going to come from, as it could have come up deeper. Basically, what happened was we went up there, we had a reaction, and our expectation was to run this low at a bare minimum, as this low is weak because it failed its job to take out this high. So now, looking at the way this reacted and following order flow, we knew this low was going to get run. So that's what I based the trade on GJ off of. So if we just go over to the 1 minute, let's try, let's see, hold on, GJ. Okay. Oh, I actually had all this stuff deleted. I guess it's saved. Um, yeah. So basically, yeah. So basically, we had a last order demand that put in this last high on the 1 minute. This red area is the 15-minute supply that made our lower prices. What we seen here was demand gets disrespected. We violated, we take it out. Some people might be eager to take a trade from this, saying, this is the area to do it. For a pair like GJ, I always go for the extremes because GJ moves aggressively and it will come and more than likely mitigate the extreme. And when you see an area like this where it's kind of just flat, that is what we call inducement. And what inducement is essentially liquidity that they put there so that they can use it to come back down and ultimately take this demand out, which is exactly what we did. We grabbed our inducement or liquidity, we came in here, we tapped, and off to hell. And as I said, our weak low here gets run. And something to keep in mind too, with Euro, you don't need stops like this. You can take much tighter stops. When you have something like GJ and you have a wick sticking up in the air, I would throw a little extra on because more than likely you will get wicked out. Like it's not uncommon for me to trade with 3, 4, 5, even 6 pips for stop for this pair, even 7 if I have to. It really doesn't bother me because how aggressively this pair moves. Whereas with Euro, we're pretty comfortable taking, zero point 0.6, zero point 0.8, zero point 0.9, even 1 or 2 pip stops, 3 pips. I don't really go much beyond that too often. Euro, we had kind of the same thing here. Order flow is obviously bearish. I came to the market. London was already moving the market and it was moving the market quite aggressively. And I was just kind of more or less looking to ride London. Now, I have 2 fibs pulled here. One fib is representing this leg, and the 50% of that fib is target 1, which is where I took my trades to. And 50% of the second fib is the more or less from here to here, the whole leg, and that would be target 2 for me, which we, I think, just barely tapped. Yeah, we did. So I didn't hold on. I didn't hold till then, but I know a lot of guys did. And same thing on the 15 minutes. You came in, you can see a lot of aggression from London. If we look closely here, particularly at this wick here, the way this OB formed, we like to see all the liquidity to the left being swept. And generally, when that happens and we get an aggressive move away, it's uh, it's more or less, it's very likely to form a strong bottom. And strong bottoms are generally protected. So if we quickly look on the 1 hour, not a time frame I use a lot, but in this case, what we get here is a bullish engulfing candle, and it engulfs more or less 3 or 4 candles. And we can also see the size of these candles. So we've obviously got a lot of momentum in the market. I wasn't too worried about running this for a couple of reasons. One was the higher time frame, as we did need to come up here and mitigate something. And ultimately, we're obviously still looking to run this daily low down here. So that's kind of what I'm hoping for. If that doesn't happen, I guess we'll buy it back up. That's fine too. But on the 15-minute, I think for New York, I came in around here. And a lot of guys would probably say this is high in the leg and wouldn't continue buying. However, if your narrative of the story is to come mitigate 50% of the 4 hour leg, it doesn't really matter, and you can just continue following order flow. In the event that you get taken out and price does come to the last demand here, you can just simply buy again, and you can even short down to this demand. So it really doesn't matter what the market's doing. We pay attention the best we can and we adapt. And if it's with trend, we can hold a bit longer and be a little more lenient with our how we manage. Whereas if it's counter trend, obviously you manage more aggressively. So these are kind of mitigation to mitigation. On the 15-minute, these are all 15-minute OBs. Um, this is just bullish order flow. And all we did was we went back down to where the move started. So this here if we just kind of break it down, you sweep the lows, you sweep the highs. When you sweep these highs, when you sweep these lows, that's change of character. And ultimately, this demand causes this supply to fail. So we have a supply to demand flip, and this is where demand takes control. And ultimately, you can frame a trade off that. Here we have not quite the same thing, but you do have higher prices. Again, the move initiated here. You have inducements sitting up here. We're always looking for inducement as we need it for our next move up. And more or less, we made higher prices one more time. We have inducement here, 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 and once again, we came to mitigate the area, and we just kept going up. And if you really wanted to, you actually had one more area to get in right here off of this little range in this wick. And the reason that's valid is when we came back up aggressively like that and we took out this high, that told you we are still very much bullish and we're going to continue seeing higher prices likely. So that's basically all these trades were based off of. We're always just looking for areas that started moves, change of characters, and flips happened. Obviously, we had a change of character and a flip here. We didn't get a complete change of character here, but it's with order flow, so it's fine. Here we got a complete change of character again. Change of character being we swept the lows with this wick. We came back up and we swept the highs. Some people might say this is the area that swept the highs, and to me, that's inducement for this, so it'll likely be run. So more likely than not, this should go. And like I said, we just follow order flow. In the event order flow failed, we would have shorted back down to this demand and looked for another change of character and a flip and bought it back up. And if this demand failed, you would have just kept shorting. That's essentially how I frame these up when I look at it. So the most important thing in your analysis is obviously looking at 4-hour and 15-hour structure and looking at what makes sense. So on the higher time frame, obviously we expect a higher time frame mitigation. A good target is 50%. A lot of the times it won't do it. A lot of the times it'll come up to 70 or 80%. But 50% is generally a good target for any leg as a retracement. And this is why a lot of fib traders are successful. They sell in a premium and they buy in discount. And that's why the fib works. This is just a refining of the fib with little tighter stops. So you can get a little better RRs. It's just combining everything at once, I guess. So yeah, that's kind of the quick version of what happened here. GU, I didn't really look at too much, but it was similar to EU. I did frame up this trade. I didn't take it, but it was very similar to EU. I know somebody in the group was asking me to go over GU. I didn't personally like it too much today, but it's the same thing again. You have very aggressive order flow, and the likely thing to happen is for all these OBs to get run. The reason these OBs get run is all of this has been mitigated, and every time it gets mitigated and it takes the inducement or the liquidity and it makes lower prices, there's no longer liquidity or inducement sitting there. So the next time they come through there, these OBs really don't have a lot of strength and they're likely to get run. Had I been in GJ today, I would have felt pretty comfortable holding it right up into 38, 485 without a doubt. To me, that would have been kind of the first area I would have looked at. I would have definitely not thought too much of these. To me, they were looking at them, they just look like they need to be run. But being that we took GJ and Euro, we stayed out of GU today. I'm sure I'll have some GU trades next week to recap. Because, like I said, somebody in the group was asking for GUs. I think it's a pair they trade a lot, so we'll definitely go over it more. But yeah, that's the quick version of what happened, and I hope you guys have a good weekend.